Here we are in a new week, and it's time to wait Monday and Tuesday because that's the more money you will make if you wait and knowing when and when not to trade. Monday, happy Veterans Day to all the veterans out there. Thank you for your service. Tuesday, no holiday, no news. We've got 8:30 a.m. news catalyst Wednesday, Thursday, Friday. Wednesday, we've got inflation, retail, CPI catalyst, 8:30 Thursday, PPI wholesale inflation catalyst, 8:30 a.m. retail sales. So these are red file major news catalyst events, and I expect some kind of movement in price. But that takes care of the calendar, the day of week, and the time of day. Let's go to the charts, see where we're at here. S&P 500 all-time high trap. We did hit another all-time high Monday, 11/11/24. Let's get into it with the charts. The weekly chart on the left, this is for bias. Note the Bollinger Band on the red line. That's the upper Bollinger Band. And look at this last week's bar. Look at that candle. Very large candle, piercing upper Bollinger Band. And look what it left behind. A blue line. That's the 3 exponential moving average. And that comes in 5976.66. And currently we're 6037.50. And we did hit a new high today, but it was not in the regular trading hours. It was in the AM pre-RTH open hours. So that's very important here. If you think you've got FOMO because you missed out your buying here, probability-wise, it's probably not the best thing buying the second week in a row upper Bollinger Band. On the daily, same thing. Look how many days we've had upper Bollinger Band, 4 days in a row. And here we are Monday, same thing, piercing. What did we leave behind? Again, the blue 3 EMA. So that's happened. So you know my thoughts basically on price, leaving these air pockets. That's one of the setups that I know if there's some patience happening for the week. It's not that I'm bearish. I'm just saying a little mean reversion. It's not even halfway of the candle that happened previously on the weekly. So the weekly is my bias. And my bias is at some point we tag or come very close to tagging this 3 EMA on the weekly. And again, 59.76, 59.77. Let's go to the next chart and look at some inefficiency levels, because that's the other thing I want to look at besides this 59.76. And on the daily, that 3 is 6009. So now that we know that, let's go to the other charts and take a look. 15-minute naked chart. So I don't have anything on here marked, so we can just look at it and eyeball. This is today, Monday the 11th. You can see the high made before the New York Open, and that was a 6,053.25 high here. Here we are again, 15-minute candlesticks right before the lunch hour. And you can see what I've got below here, just on relative equal lows, sell side liquidity. I would say primary, we're down here, so they just move that up a bit. That comes in 0.75, okay? So that's a ways down, 35 handles below, so not so much. And when did we last hit that? Friday AM before the market opened. So let's put the lipstick on. New week open gap, okay? So this is important because we started out from Friday close to the open in Globex for Monday in Asia. This is the Globex new week gap right here. So 6023.25, 6029.50 in purple, all right? You can see we've already in the AM had candle wick dip into that. That means we're still bullish until this breaks. You can forget about going into that 59.90. Below that new week open gap, because there's going to be price magnet down here. The next imbalance on the Fowler is right here, but that's not major. What's major is this daily giant, daily in yellow, fair value gap imbalance. This thing is where we hit into the 90s. So I've got the 90s marked down here in the red. I know it's busy. There's a lot of lines here. I'm going to clean that up. But still, if you just look at this chart here and go back, it doesn't look like it's got a lot of legs to go a lot higher. And remember, there's no institutional banks open on a Monday. This is a throwaway day. I'm not going to really care what it does, even Tuesday. It's all about the CPI Wednesday and beyond. So that's when big money's going to step in and either support this thing going up to 6,100, or before we get to that, maybe we go back and do a little bit of a mean reversion. So I've got this little line drawn here on the previous lows, but really this is interesting target. So what have I pointed out? I pointed out my bias on the weekly and the daily, and I noted the error on the 3 EMA. And now I'm showing the bigger high time frame imbalance, which is the daily here. And if we go to that, the consequent encroachment, or 50% fib of that, comes in right here with this red line below 59.90. So I like that 59.90 price. I think that's a good target for the week. And if we were to go ahead and break that by Wednesday, Thursday, Friday, that would be fine by me. And then we go from there. But at this point, no new trades, only exit on positions carried over from last week. And I wanted to give it the whole morning session to figure out if we were going to have another high all time for 2024 and all years. And then we certainly did. So that kind of wraps here the 15-minute. The last thing that I'll look at is the NASDAQ compared to the SP 500. Let's get to that one. Weekly candles, left side, S&P 500, right side, the NASDAQ. I don't trade the NASDAQ, but I want to see how they're doing in comparison on my bias, and it's pretty much the same here. Again, I've got the 3 EMA with some air, and basically that's important to note because we have air also here. We've got record high on NASDAQ, 1111, same with the S&P. So not that I trade it, but I want to see that there's chemistry and synchronicity. So again, all the equity markets, major sugar high rush, post-election. I'm not chasing it. No FOMO here. Waiting for a mean reversion. We can still revert down, have a little bit of a mean reversion, and still keep bullish context till the end of the year. And I pointed out with the 15-minute chart, those imbalance areas, especially that daily fair value gap. And I just want to point that out here with the daily on the right side here of the S&P. Before we go, this is it right here, this yellow box. So I'll blow that up. So as long as we don't go below the middle of this box, so we can go and hit our 90, and the middle of this consequent encroachment's 83, 59.83. We can hold bullish context if price does not have a day where we close below it. If we close below it and don't respect the imbalance here, we could be going even further down, and then we've got a volume imbalance down here at 59.65. But that's seems like it's 10 miles away right now because we are way up here. So we'll take it one day at a time. And again, Wednesday, Thursday, Friday are the trades. I'll put out another video at the end of the week. Thanks so much for stopping by. Aloha. Take care. Bye.